All right, so good evening, everyone. Um, this session is to guide us in the preparation of our interim assessment. I'm not saying this is coming to your IE, but then for the past years, the introduction to accounting IE has always been a written one, whereby you would be required to go and write it, sit down and write it, pen and paper. You write it with pen and paper. So usually, I think they were using this topic usually, which is the manufacturing. But since things have changed now it's OBJ, and they are going to write it on site at UGCS. So I thought it wise to go through these questions, which will just open up your mind, and not to say that you should depend on it. Since students, that is what some of you know, that you want to depend on it. And then, so I told you guys earlier that you should go through the slides thoroughly, right? And I gave you the topics that you should go through. Yes, so this one, since it's going to be OBJ or maybe fill-in, it means it's going to cut across all the topics, right? OBJ is going to cut across all the topic, except that you have been given specific topics that the IA will be from. But for OBJ, what I know is that usually cut across. Yeah. So it means you have to go through the slides. So read the slide. I told you in the morning to go through the slides thoroughly. And I believe that you have done that. So here we are coming to have a short discussion on each of them, on each of the questions. So which answer that we think is best, we analyze it together. I'm not coming to give you that this is the answer. Let's analyze it together, and from explanation, we would all conclude that, oh, okay, then this is the answer. All right. So someone should read for us. Someone should read for us.
Final accounts include preparation of A, trading account, B, profit and loss account, C, balance sheet, D, all of the above.
All right. So what is the best answer for this question? What is the best answer? Yes, to the class. Anyone at all can answer so that we move quickly, right? Let's do so that we tackle another document which also has OBJ. Yes, who is answering? Quickly. You just say the answer. Sorry? Yes. What do you think is the right answer?
All the above.
Yeah. Why do you think all the above?
Because final accounts involve the preparation of the income statements and the balance sheet. The income statement has the trading and then the profit and loss. So I think it's all the above.
Okay, so all the above from her explanation. All right. So question 2.
Dash is a part of income statement which is prepared to ascertain the gross profit or loss for a given accounting period. A, manufacturing account, B, profit and loss account, C, balance sheet, D, trading account.
All right. So that is the part income statement which is prepared to ascertain the gross profit or loss for a given accounting period. Yes. So which of them is the answer?
The trading account.
Trading account. Okay. All right. So I believe we all get that. Trading account gives us the gross profit or loss for a given period. All right. Question 3.
In trading account, closing stock is shown as dash. A. Cost price. B. Net realizable price. C. A or B, whichever lower. D. A or B, whichever higher.
Yes. So which of them? Yes. Anyone to try? All right. So the answer is C. In trading account, closing stock is shown as A or B, whichever is lower. Right. So in IAS 2, right, standard, how do we value inventory, or how do you value stock? The value of stock is the lower of the net realizable value and the cost price. So in IAS 2, which you have not gotten there, when you get to level 300, you would go IAS 2. So IAS 2 is the lower of cost and then the net realizable value. So the answer is A or B. Which of them is lower? We pick the lower of the cost and the net realizable. All right. 4.
Dash is the difference between the selling price and cost price of goods sold. A. Gross profit. B. Gross loss. C. A or B. D. A and B.
Okay, so which of them? Yes.
A and B, which is D.
A and B, which is D. Gross profit, gross loss. The difference between. Okay. All right. Should we accept that? Is that A and B?
D.
Yes.
Why are you saying that? Give us your explanation. Because I would go by the C. I would go with the C. You know why? Do you know why I'll go with the C?
Okay.
It's gross
Please tell me
profit
why. Okay, please
loss
tell me why.
slash loss. You get it now? It's gross profit slash loss. That will give us the difference between the selling price and the cost price, right?
Okay.
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 So that's
Okay.
all right. So you can continue.
Which of the following equation is correct? A. Gross profit minus is equal to net sale minus cost of goods sold. B. Gross profit is equal to sales plus closing stocks minus opening stock purchase minus wages. C. Cost of goods sold plus goods profit is equal to sales. And D. All of the above.
What do you think? The A, gross profit, is it correct? For the A, is it correct?
Yes.
Is the A?
Yes, it is.
Yes. Because we have the sales less returning was. Then you get the net sales, right? Then you deduct the cost of goods sold. So it makes sense. A makes sense. B,
Yeah.
gross profit is equal to sales plus closing stock, right? Less close opening inventory. Sorry, opening stock purchases minus wages. Does it make sense?
No, no.
It doesn't make sense. Why doesn't it make sense?
For what I know, if I'm seeing it, so I'm seeing opening stock. I'm seeing closing stock minus opening stock purchase minus wages, and then
Yeah.
I think the opening stock is being added, and the wages also being added as well, not less.
Oh, really? Okay, so let me, where's my whiteboard?
I'm seeing it.
Where is it? Right, so you see we have sales, right? The sales is, let's say, and then we have less cost of what? Cost of sales, right? Right? Are you following? What's your name? The guy who answered.
Yeah.
Right? Okay. So now, under the cost of sales, you and I can attest to the fact that the total figure that we get, we are going to deduct it from the sales, right? Are we going to deduct it? Hello, are we going to deduct it from the sales? Yes. So the opening stock is added here. It means it is positive here, and this positive will reduce this sales, right? Right? This positive is going to reduce this sales. And then when we go to closing stock, what do we do? The closing stock, we less it, right? Instead of this one is added. So let's say this one is 50. Here we are going to less, the closing stock is less, right? So if we less 10, then with the wages also is treated as what? Cost of sales. What do we do to the wages? Wages is also added as part of the what? Because let's say wages is 15. Wages is also as part of the cost. But then the closing stock, we deduct it. So if we are saying that the sales plus, since we are deducting it, it means you are reducing the cost of sales amount. We are deducting it from the cost of sales. So we are trying to reduce the total cost of sales, which would have reduced the sales amount of 1,000. I don't know if you get what I'm saying. Because here, all the cost of sales, the total, so it should be positive figure, or let's say 10, 20, 30. At the end of the day, we are going to deduct the total amount, 30 plus 20, 50, plus 10 is 60. at the end of the day, we are going to deduct this 60 from the 1,000. So it is going to reduce this 1,000 sales. But you can see that the sales is also reducing. The closing stock 10. Instead of being a positive figure, it is negative. It means we are reducing it. It is reducing the cost for us. The closing stock is reducing the cost of sales for us. And the wages is increasing. The opening stock is also increasing. So we can say that the sales plus the closing stock minus the opening stock minus wages. It is correct. It makes sense. I don't know if you get it. Do you get it?
Okay, I get it.
You get it, yes. But the closing stock is a negative figure. Wages is a positive. Opening stock is also positive. And they are all cost. And this cost will reduce at the end of the day will reduce the sales. So it makes sense when you see the sales plus the closing stock minus the opening stock minus wages. So it is a correct statement as well. The last one is what? What is the last one? Cost of goods sold plus goods profit is equal to sales. Does it make sense?
Cost of goods sold.
Does it make sense?
No.
You know, another name, if there is no wages, then the cost of goods sold is the same as cost of sales. Cost of goods sold. If there is no wages in the question, then the cost of goods sold is the same as the cost of what? Sales. So this will be a negative figure. What are we getting? We are getting gross profit. So can I say that sales is equal to what's the name? Cost of goods sold plus profit plus gross profit. Can't I say that? Do you know this formula? Selling price minus cost price is equal to profit. Do you know this formula? Hello, do you know this formula?
Yes.
So can't I say that selling price is equal to profit plus cost price? Can't I say that? Making selling price the subject. Hello.
Yeah.
All right. So does it make sense now?
Yes, please. It makes sense.
All right. So what is the answer?
So then it's all of the above.
Yes. So that is all of the above. So question 5 is also D, all the above. Let's continue quickly.
In trading accounts, closing stock is shown at cost price or net realizable profit. Above is lower. This is due which above is lower. This is the due application. In trading accounts, closing stock is shown at cost price or net realizable price, which above is lower. This is the due application of dash. A. Convention of disclosure. B. Convention of materiality. C. Convention of consistency. D. Convention of conservatism.
All right. So the answer is convention of conservatism. conservatism. All right, you can go and research on it later. 7.
Gross profits or gross loss of reviewed by trading account is transferred to dash A. Balance sheet, B. Profit and loss account, C. Manufacturing account, D. Profit and loss appropriation account.
Yes, so gross profit or loss of reviewed, if reviewed by trading account, is transferred to which? Where do we transfer the gross profit or loss?
Profit and
We
loss
transfer
account.
it exactly. Profit and loss account. Transfer it to the profit and loss.
The net
You can
profit
continue.
or loss is transferred to dash A. Drawing account, B. Capital account, C. Suspense account, D. None of the above.
The net profit or loss is transferred to yes. Where do we transfer the net profit or loss? We transfer it to capital.
None of the above.
Hey, are you sure? Net profit or loss? When we are preparing the financial position,
None of
capital,
the above.
add, really? None of the above. Wait, let me show
Net
you.
profit. Okay.
Yeah.
So finance by, do you remember finance by? Add, is it add capital? Finance by capital, add net profit. So the finance by equity, and that can be said to be capital, right? Capital. So it's capital account. It's capital account. Let's continue.
Which of the following business entity will not prepare a trading account? A. Banking companies, B. Insurance companies, C. Investment companies, D. All of the above.
So which of them will not prepare trading account? Yes. Which of them? Well, let's try. Let's give it a try. Right. So insurance companies.
The total of the two sides of the balance sheet must agree because of the following equation. A. Asset is equal to liabilities minus capital. B. Asset is equal to liabilities plus capital. C. Asset is equal to fixed assets plus current assets. D. All of the above.
Yes. This one there, I shouldn't talk. This one there, you know it already. What's the answer? Hey, So what's the answer for the question 10?
Say B.
B. Asset is equal to liabilities plus capital. That is true. That is true. 11.
Dash is prepared for ascertaining the cost of goods produced or cost of production. A. Trading account. B. Manufacturing account. C. Profit and loss account. D. Purchase.
Yes.
Manufacture.
Yeah,
Say B.
manufacturing. Yeah, manufacturing. All right. 12.
Balance of manufacturing accounts. That is cost of production is transferred to dash. A. Profit and loss account. B. Manufacturing account. C. Trading account. D. Purchase account.
Trading account.
Yeah, so it's trading accounts. That is good. All right, let's continue. 13.
The arrangement of assets and liabilities in accordance with a
I believe
particular.
you understand why it is trading accounts. The preparation of the manufacturing, don't you send the cost of production to the what's the name? In place of purchases? You see where we put the purchases? Opening inventory, add purchases. Here you add the cost of production. Do you remember? You add the cost of production instead of that. So that is the trading, right? Let's go. 13.
The arrangement of assets and liabilities in accordance with a particular order is known as dash of balance sheet. A. Tallying. B. Making. C. Ruling. D. Marshalling.
So what's the answer? 13. All right. So marshalling.
Dash approach assets which are to be used for long term in the business and are not meant to be sold are presented first, and assets which are most liquid, such as case in hand, are presented at the bottom. A. Alphabetical order. B. Permanence order. C. Liquidity order. D. None of the above.
Okay, so that's approach assets which are to be used for long term in the business and are not meant to be sold and are presented first, and assets which are most liquid, such as in the case of such as I think cash in hand, are presented at the bottom. So what is it not liquidity? The ones that are most liquid, the ones that are most liquid will come at the bottom. All right, let's continue.
Dash are those which are acquired for long use in the business and not meant for resale. A. Fictitious assets. B. Intangible assets. C. Fixed assets. D. Current or floating assets.
Fixed.
and assets which are most liquid, such as the case of okay. The 14, I think the answer is B. It's not about the liquidity order. It's a terminology which is permanence order. So you can search for it from the internet, permanence order, and read it. So it's permanence order. All right. 15. That dash are those which are acquired for long use in the business and not meant for sale. What is that? Is it not fixed asset?
Yeah.
Yeah, so fixed asset. Fixed asset. All right. 16.
Dash are valueless assets but shown in the balance sheet on asset side. A example, preliminary expenses. A fictitious assets. B intangible assets. C fixed assets. D current or floating assets.
Mm-hmm. So which of them are valueless? Intangible assets. We know it has value, right? Fixed asset has value. Current or floating asset has value. So it's not fictitious asset. So fictitious asset.
Dash are those that are meant to be converted into cash in short term. A fictitious asset. B intangible asset. C fixed asset. D current or floating asset.
Mm-hmm. So what's the answer? Short term, converted into cash in the short term. Is it not current or floating asset? Yes, current or floating asset. Mm-hmm. Continue.
Dash which can be immediately sorry. In which of the following closing stock does not appear? A trading account. B trial balance. C balance sheet. D all of the above.
Which can be immediately converted into cash, such as government securities, intangible assets, fictitious assets, what else? Wasting assets, floating assets. All right, so that will be a floating asset. That will still be a floating asset. That is the current asset. That is a current asset. Can be converted into cash. So government security, yeah. Short-term bonds. We continue.
In which of the following closing stock does not appear? A trading account. B trial balance. C balance sheet. D all of the above.
So in which of the following closing stock does not appear? In which of the following closing stock does not appear? A. All right. So trading account, trial balance, balance sheet, all the above. So which is which? Trading account, do we see closing stock inside?
The trial balance.
Balance sheet, we see closing stock inside. All right. So trial balance is the answer. All right. So that is correct. Trial balance.
In order to prepare final accounts, all nominal accounts will be transferred to trading and profit and loss accounts, bypassing account journal entries, which are called as they close the nominal accounts. A. Opening entries. B. Adjustment entries. C. Closing entries. D. None of the above.
Which of them is the answer? In order to prepare final account, all nominal accounts will be transferred to trading and profit and loss accounts. Bypassing account journal entries, which are called. What's the name given to that?
Opening entries.
No. It's rather the opposite. It's the closing entries, right? You are closing off the account, right? And you transfer them to prepare the final account. To prepare the final account. So you balance off all the accounts, and you take their closing balances, you send them to the trading account, right? So the answer is C. Answer is C. Read that.
From the following figures, ascertain the gross profit. A. All right, so let's ascertain the gross profit. So let's follow. Where is it? So you have the sales, right? How much is the sales?
19,000.
19,001,000. And then any return in what? No return in what? All right. Then we less our cost of sales. So opening stock. How much is the opening stock? 25. What are they paying? All right. 25,000. And purchases. How much is the purchase? 13,000,000. What else?
Right.
Freight. What is the meaning of freight?
Whenever you carry your goods in a car, like the amount that the driver will take from you, like
So that is the carriage inwards, right? That is serving as the carriage inwards. Yeah. To add purchases, add carriage inwards, right? Good. So how much is it? That is 50,000. What else? Return outwards. Any return outwards?
No.
Then we less our closing stock, right? So what are we getting? Then whatever amount we get, the service we find the what? Gross profit. Okay, so how much is the gross profit? No, give me the cost of sales so that I deduct it from there. How much is the cost of sales figure? Wait a minute. Give me the cost of sales. So guys, hurry up.
Oh, shit.
Hey, so no one is having calculator?
It is 1,450,000.
1,450,000. So if you deduct it from this, what is our gross profit?
$450,000.
You have 450,000 in there. Yeah. Is it a B?
Yes.
Yeah. So the answer is B, right? 450,000. That is our gross profit. The answer is B, gross profit. All right, 23. Where is my reader?
Opening stock RS 4000, purchases RS 260000, closing stock RS 20000, cost of goods is equal to
Here, I've been given opening stock, 450 purchases, 260 closing stock, and they're asking cost of goods. So, cost of goods, okay. So, the opening is positive, 40,000.
there.
Yes.
Please, since it's a foreign currency, how do you pronounce the figures?
Hey, is it RS? RS means like, is it Indian? Let me, let me see. I don't know the currency. I don't know the name,
Yes,
but
please, Indian.
what's, let me search for the name. So in Ghana, they will use the Ghanaian cedi. All right, so keep read the 23. Have you read the 23 already? That is Indian rupee. Indian rupee, right?
Yes, please.
Now Indian rupee. Okay. Yeah, so we have the stock, opening stock, and then purchases. Purchases is what? Positive. We add purchases, 260. What else?
Yeah.
Less closing stock.
Yeah.
Yeah.
You know, it's like beautiful.
Sorry?
Then yourself pass. Like canopy.
I seem not to hear you. Can you hear him? Or I'm the only one.
We can't hear him.
Oh, okay. Then boss, you're on your own. Okay, so what is the cost of goods? Cost of goods. How much do we get? Is 380? Is it 380? 260 plus 40 is 300. 300 minus 20. Hey, 300 minus 20, so 280, right? Is it 280? In the
Yeah.
options, do you have 280?
Yeah.
Okay. So the answer is what? D. Yeah, D. 23. Okay. So let's continue. It's just for you to know your format. Just know your format and read the slides. Theory now. No. You are good to go. 24. Hey, where's my reader? Is she gone?
From the following information, calculate net profit. Gross profit on sales. A 25000. B 350,000. C 200,000. D 150,000.
Hey, so you don't mention the figures. Figures in there we cannot see. In accounting, when you are reading, don't waste your time to mention the figures. What else? Just mention the items.
Yes, please.
All right. So now, sales. They tell you gross profit on sales, 25%. Okay. All right. So let's try something else. All right. Sales is what? 2400. How many zeros? 4 zeros. Hey. 1, 2, 3, 2, 4, 6, 2, 4, 6, 2, 4, 6. Okay, we're going to make it 1 0. 2, 4, 0, 0. 1, 2, 1, 2. So 24,000. All right. So let's continue. And then net profit. Okay. So less cost of sales. Opening stock. Opening stock is how much? 15,000,000. What else? Purchases. Do you have purchases? No. What else? Uh-huh. Gross profit on sales. Okay. Okay. So gross profit percentage. They're giving us gross profit. So what is our gross profit? 25% on the sales. Let's find that and see. Gross profit ratio on sales. Okay. So 25% on the sales. What is that giving us?
6,000.
That's giving us of offer. Yeah. Good. 6 million.
It's giving us 6 million. This 6 million, let's deduct, that's our gross profit, right?
Yes, 60 million.
So then let's deduct all our expenses from it. What are the expenses? Direct expense. How much is direct expense? 300,123. What else? Selling and distribution expense. That one is how much? 200,000. What else? Admin expense. Admin expense is how much? 100,000. Okay, so that is 100,000. What else? Finance cost. So finance expense is how much? 50,000. So what is our net? What is the total expenses?
$650,000.
650,000. All right. So what will be our net profit? Sorry?
5,350,000.
5 million. You are getting
5,350,000.
350,000.
Yeah.
Wow. Is it here? No. Hey, what are we missing here? Okay. Let me see. SP.
Maybe we should include the opening stock and this one.
Opening stock, I say. Opening stock, 15,00123. Right. Okay. And inside the opening stock, what are that costs? We don't have anything. Okay. So then we less the opening stock from it. Let's less the opening stock from. Okay, and they've given us the gross profit. Gross profit. So the opening stock, add purchases, less closing stock. We don't have all of these. All right. And they've given us gross profit, we said 25% on the sales. So that gave us 6 million. Is it giving us 6 million? 25% of 24 is this 6 million. Confirm that for me.
6 million.
6 million, okay. All right, so I get in 6 million. So it means deduct this from 6 million. Let me see.
Deduct.
What are you getting?
You said we should deduct what? The 15 million.
Yeah, the opening stock from there.
Okay.
Is 1.5 million. It's not 15 million. 150000.
This is 5.
What are you getting?
450 sorry, 4.5 million.
You are getting this?
Yeah.
Okay. This 4.5 million. Deduct 650,000 from it. Let me see. Deduct 650,000 from it.
That is 385 million.
3 what?
385,000. That is 3,850,000.
850,000.
Yes.
Hey, and it's not here.
Yes, bro.
Wow. Any idea? Who has an idea? Because I don't know why I'm not getting it here. Then it means I have to go back and look at it.
Okay. So,
Okay. Any idea? Any idea? Who has an idea? What have you omitted? Because you are supposed to get a figure there.
So I
Alright.
think the sales figure there is supposed to end with 3 zeros instead of 4 zeros.
The sales figure.
Yeah, because if you do that and you get the gross profit to be 600,000 instead of the 6 million, and that one you get 250,000 is in the answer.
If you don't give me correct figures, you worry me. Give me calculator. My calculator is not here. So give me correct figures. Selling price is how much? What is the selling? The sales. Sales is 24,000. So let me use my phone. What is it? 25% times 24000000. So what do we have? We have 1, 2, 3. 1, 2, 3. Is it not 6 million?
6 million. The same 6 million.
It's the same 6 million. No. Then there's something wrong. I think it will be without. Let me see. There's something wrong. Okay. So let's skip this question. Let's skip this question. I mean, okay. So yes. The answer is supposed to be what's the name? 250. 250. This should be supposed to be the answer. So I think the 24, as she said, that there is you're not supposed to have 1 0. You're not supposed to have 1 0. So it's, if it's 600, it's given us how much? The sales price is 600.
The 250,000.
So 600 deduct the expenses.
600,000. Okay.
So is it the first one that we did?
The expenses are how much?
600 minus 600,000 minus all the expenses. What are we getting?
Then
So this gross profit is supposed to be 600. Mm-hmm. Less all the expenses. The expenses is what 650. Uh, let's just skip the question. Or what were you saying?
please let's try what he's saying and see if you can get it. Is it the
The lady who was speaking, please come again.
This is 250,000.
Mm-hmm. How did you do it?
So you see when you check the currency, it ends with 3 zeros and the sales ended with 4 zeros. So if you remove the last zero, it gives you the correct figure.
So 25% of the 24, how much are we getting?
So you are not going to use 24,000 because that's wrong. So it's rather 2,400,000.
All right, so 25% times 2,400,000. What do you have?
600,000.
You have how much?
600,000.
600,000. Mm-hmm. So this 600,000.
so if we take the expenses, which is the 650,000 from it, we will get a negative figure.
You get a negative. Uh-huh.
Yes.
Well, the expenses, I think we had 650, right?
Yes.
What is it? Yes, 650.
650,000.
Please, the direct expenses is under manufacturing, so like it doesn't come in the next net profits calculation.
No, no. 650. Mm. Okay, it means that when we exclude the direct expenses, then we are getting the 250,000.
Yeah.
So we have to take the 300,000 from the total expenses. Right?
Yes, because it's under manufacturing.
Okay, then that one can give us the answer.
This is the only me or everyone. Can you see the slide and the screen? Hello. This is first still sharing.
Hello.
Okay.
Hello. Hello.
All right. I said in exams, if you face a situation like this, don't waste your time. Just go and do the theory. Right?
Yes, sir.
Hello.
So I agree with what the lady was saying that when we exclude what do you call it, the direct expenses, then we are getting at the 250 because we assume that the direct expenses in the manufacturing and then we don't include in the trading account. So when we take it from the total expenses, then we're able to get the 250,000, which is the A.
Direct expense. Oh, okay. All right. Okay, makes sense. It makes sense. So the direct expense, that will go to the manufacturing setting.
Yeah, that would be in the manufacturing, but not in trading.
Manufacturing, not in trading. Exactly. Okay. So is that if you deduct that one from it, so it means we are deducting 300, so you are getting 350.
Yes.
So what are we getting?
So 350 from the 600,000, then we are getting the 250.
So you are left with 350. So 350 minus what? Minus 600.
Yeah.
So it means there is with the sales, there's 10 added is not correct, right?
Yes, please.
Okay. All right. So the 600,000 minus the 350, and that is giving us what?
250.
Mm, that's giving us 250. Okay. And we have 250 here.
Yes.
So that is, we take it like that. Okay, take it like that. All right. Thank you very much. So now let's move on to the next one, 25.
Cost of goods sold 200,000 Rs. Gross profit on cost 25%. Salary 15,000 Rs. Rent 7,000 Rs. Bad debt 1,005 Rs. Drawings 2,000 Rs. Creditors 2,500 Rs. The net profit is equal to.
All right. So we want net profit. Okay. So where is the, yeah, starting from what? Gross profit on cost is 25%. So what is our gross profit? 25% on the cost, 2,200,000. Is that 2 million? That
That
is
is 200,000.
200,000. These people, why are they bringing the comma? Hey,
This one just to confuse us.
200,000.
Go ahead.
So what do we have?
50,000.
50,000. Okay, 50,000. What else? Then less the expenses. Expenses, we have salary. What else? Rent, bad debt, um, that's all. So give me the expenses. 15,000. This is 7,000. This is 1,500. So what we have? What do you have? What's the total of the expenses?
Uh, 23,500.
23,500.
22 or 23?
23,500.
So if you deduct that from what are you getting?
$26,500.
26,500. Do you have it here?
Yeah. Option C.
Okay. So the 25, see, 26. Hey, Marina.
Salary paid during the year 35,000 Rs. Salary outstanding 2,500 Rs. Salary outstanding on 31st March 2012 7,500 Rs. Net salary debited to profit and loss account for the year ended 31st March 2012 should be dash.
So we add all prepays.
So net salary debited to profit or loss account for the.
And accruals.
So salary paid during the year 35. Salary outstanding 2,500. Salary outstanding. Okay. So what do we do? I heard someone saying add all outstanding, right?
Yeah. So we're adding all
So the first salary is how much?
35,000.
Mm-hmm.
And the first outstanding 2,500.
Oh. So outstanding. Let me even clean the top one. Outstanding is 2,500. Do we add or we deduct? How we add, right?
Add accruals. Yeah.
Then salary outstanding. Do you have any accrual prepaid inside?
No.
Any prepayment?
No.
Oh, okay. So then you add everything.
Yes.
So just add everything and see. 7,500.
Okay. 2,500. 7,500.
45,000.
What is 5,000? $45,000.
Should we go by the 45,000?
Yeah. Yeah.
Okay. Okay. So add the 2,500 plus 7,500. Deduct it from 35,000. Let me see.
35,000.
85,000.
25,000. Okay. So which is which? But we know that all outstanding are added to the amount paid, right? In the income statement, we
Yeah.
add it.
Yeah.
So we go by the 45,000.
So the first one is the one in the trial balance.
Okay. Yeah, the first one is the one in the trial balance. Then the outstanding as at first 2011.
And then
Then outstanding on 31st was July. Okay. 2012 at the end. Wait, they've given a net salary debited to profit and loss for the year in the 31st March. Okay. Okay, so at the end. 27. Yes, 27.
Debtors as per trial balance 40,600 Rs. Bad debts not yet provided 600 Rs. Provisions for debts to be made at 5% on sundry debtors. Provisions for discounts on debtors to be credited at 2%. Amount of provisions for discounts on debtors Rs dash.
This question is loaded.
So debtors as per trial balance. Bad debt not yet provided. Provision for debt to be made 5% on sundry debtors. What else? Provision for discount on debtors to be credited at 2%. Amount for provision for discount on debtors is how do we tackle this? The debtors balance was how much? 40,600. Bad debt not yet provided for. Bad debt is an expense. Okay. Provision for doubtful debt 5% on provision for bad debt. It was 5% on the sundry debtors, right? So what do? We deduct the bad debt from the trial balance, right? So what are you getting? And then amount provision for discount. Provision for discount is at 2% on debt is 2% to be credited. %2 on 40, 60, 600 minus 600. Do it and let me see. What are you getting? Hello?
So the provision for bad debt, I got 1,430.
1,400 and what?
30.
1,430. And this one, what did you get? But the question is been asking just for the just for the discount own, right? 2%. That'll be how much?
Say 212. I got 212.
You have 212
Yes.
for this one.
Yes.
Are you all getting that?
Yes, please.
2%. So let's say 2% of 40,000. And 2% on 40,000. They're giving us 212.
Yes, sir. Yes, sir.
I'm using experience. I pointed to my. Somebody should confirm it.
You must shock my mind.
No,
Someone
it's
should confirm.
800.
Say 2% on 40,000.
This one
800.
is 800. Because 2% is 800.
Can I say the first answer?
So 800.
So the first one will be 2,000.
This one will be
Does it
2,000.
mean the first one too is also wrong?
Yes.
Yes. It will be
The first one is
2,000.
the first one is how much?
2,000.
2,000.
Okay. So this is what we have. And so the question, amount of provision for discount on debtors. So discount on debtors, right? And we are getting 800. Do we have 800? Because the question is asking for discount. Do you have 800?
No.
We don't have 800.
We have been through and can empathize and relate to the situation that you're going through. Give you some real advice.
There is no 800. It means we are missing something. What is it?
And so if you need to do 5% on the 40,000, you get 2,000. Then you subtract it from the 40,000 again. You get to pay 60,000 on the 2%.
When you do 5%, who is giving us? Everyone wants to mute him or herself, and the one speaking should continue.
So like when you get the provision for Sanji debtors figure, which is the 2,000, and you subtract it from the 40,000, you get 38,000, and 2% on the 38,000 they give you 760.
But I think we have to deduct 2,000 from it as well. The provision for partners.
Yes.
So minus 600 minus 2,000. What is it? So 40, 600 minus 600 minus the 2,000 that we got here. So is that is given us how much? That is given us how much? 7 was 60. Okay. So the 760 is here. All right. Okay. So I think that is all. So the answers have been added. These are the answers. So you can go and verify. Then go and verify. On that note, should we continue or we should end here?
End here.
I think tomorrow.
We should end here.
We should end
End
here.
here tomorrow.
Yeah.
For
No.
okay. Right. So I think I would share another one, but that one I'll share it to the platform so that you can go through on your own, right? Since we've gone through this, I think your eyes are open. Your eyes are open, so you can now go through any other one. Just know the format, and then you are good to just know the format. If you see that one particular one is wasting your time, like the way some of the calculation question wasted our time, don't waste your time. Just do the ones you can do first. Do the stories, because accounting calculation takes a lot of time, especially the OPJ. The OPJ takes a lot of time. Sometimes you do something, if you meet one thing, you not get the answer. So you go and come and finish it. If you are not getting the answer, do your TBD and go your way. The ones that you've been able to do will help you get your A. So don't go and waste time on one question. I wish you all the best. I'll send the other OBJs that I think I have here. But the key thing is read your slides. Read your slides on manufacturing, on partnership, not-for-profit making organization, right? What else? And single entry, company accounts, and the rest. And yes, and the rest. Okay. And then those who were not able to join because of network, I think you have to watch the video, right? I'm uploading the video now so that those who want to watch it again, because they didn't get something, they didn't get some explanation clearly, and go back and watch the video. I'm uploading it now. Thank you very much and have a wonderful evening.